Please read this disclaimer carefully before proceeding further. Alright traders, welcome to this week's analysis of indices. Thanks for joining me in this analysis. My name is Vic. We will start with DXY as usual, and if you remember, in the month of August I said that market could be coming towards this water cluster moving average right there, and in the month of September we could see the push upwards. Now DXY started to push upwards, but there are few things which we must note is that market has been very bearish around here. So this upward movement may not be a very straightforward. However, we are expecting market to ultimately go upwards to meet targets somewhere around in this area. Now next month can be a bearish one, so there are few possibilities. Actually, let me take a step back. There are few possibilities on monthly time frame. One is that this month is still not over yet, and so far if you look at this particular candle, the current green candle, this is actually kind of like turning into a Harami kind of candle, because this is inside the previous one. So that means that market is obviously trying to put a reversal kind of scenario here. But next month, depending on how this candle closes, next month can be a bearish one, just to finish this previous bearish momentum. And in the month of November, it can start to push upwards. So we need to be very careful about where this candle closes. Now if you just look at this candle right now as it is also looking as a spindle, and that also means that the market is expected to continue move upwards, because this is currently acting as a spindle, which usually harbors trend continuation patterns. If I look at the weekly, this is what we had previous week. So there was a very good bullish momentum there, but market went to this moving average and started to fall back down, and I'll show you the reason why it has been happening. It has, because DXY is a combination of various currency pairs that we have, like in a USD CAD, Euro USD and all that. You can google about DXY, but one of the main factors right now is USD CAD. USD CAD has been the main factor why DXY has been acting like this. We'll see that in a second. But if we just look at the weekly time frame right here, this actually candle opened higher and closed below the previous 50%. That means there is a good possibility that it can actually start to go down. So the next week starting on Sunday afternoon or Sunday evening, depending on where you are, if the next week opens a little bit lower and starts to pick up momentum, that can be the only way DXY will survive this bearish momentum, a little bit bearish momentum that it printed last week. Otherwise, in the worst case scenario, it can actually start to fall back down right into 90 level as well, 90.70. so this is also a possibility. And before it actually reaches there are few levels which we found in our previous analysis. If you have missed that analysis, I'll post a link of that in the description of this one. Go and check it out, and that should actually tell you why we took long from here, and why we have all these levels which are there. And these levels are very good. As you can see, that the market came and respected that. It has been falling since then, but if the market wants to fall further down, it will have to first tackle 92.64, because if that is broken, then only it will try to come into this zone, and this zone is a very powerful zone. So there are few barriers before it actually starts to fall down. On the upside, we knew that these levels are very important. So if 93.66 is broken, then we are looking at 93.91, and if that is broken, then we are looking at 94.13. Ultimately, if all of that is broken, then this is where we want market to go to. This is where it can have it can have high possibility of going to. So this is 95.62, which is a very good level, because it also confluences nicely with the previous structure as well, and there are a few moving averages which are present. So far what we have seen in the previous week is that market reacted to this moving average. Now all we have to do is just wait this week how the market opens and whether it actually starts to pick up momentum to the upside or not. And if it does, like if it closes again above 50% of the previous week's candle, then we can say that it will start to go up. But there are chances that it can fall back down to this 92, and in the extreme cases it can go through all these levels all the way down to 90, 72 and also 89, 92, which is like near about round number of 90. So these are all the possibilities which we can see on weekly time frame. If we go to the daily time frame, it has been consolidating and it has been giving us very good profits. If you are trading DXY directly, then you know what I mean. There are several WNM patterns which we can quantify, and these are very profitable because we can quantify them, we can predict them. If you're not able to identify WNM patterns, let me give you a very quick overview what I mean. If you see here, market has been creating an M pattern, so there is an M pattern here and that's why the market went up. Another one is right there, it completed here, it went up, and similarly another M pattern which actually was completing here but then got extended into our zone, and this is the trade that we took. Again, market has created W pattern here and that's why it has been falling back down, and towards the end of Friday it's actually started to pick up, so we'll see whether it actually breaks through this level of 93.59 and ultimately 93.66 before it starts to move up. Ultimately this is going into consolidation at the moment, but there can be sudden movement in DXY, and that is because of USD CAD. So if I just move over to USD CAD for a second, what USD CAD has been doing is the same thing. Here we analyze that market could be going into this level, and now what it is trying to do is actually consolidating at the moment, pretty much like what we saw on DXY. So if I just remove all these previous arrows, not to mislead you in anything, you see that the market came and created this W pattern, and that's why it actually fell down. If you go back to DXY, you will see the similar kind of pattern here. At the moment DXY is being driven by USD CAD, and if you go to the Euro USD is also doing the similar kind of thing, but it's not exactly doing what DXY is doing. There is little bit of discrepancy right now. There is more correlation between USD CAD and DXY right now. So if you are interested in knowing what DXY is going to do, I suggest next week look at USD CAD more closely. So going back to DXY, let's look at from daily time frame again. Now on daily time frame, what we can see that market is at the moment it actually started to pick up, but then there was sudden movement which actually brought the price down, and that happened because of USD CAD, which we saw. So what we need to see is that there are couple of days where it can actually start to move, and if it picks up the momentum, then only it will be able to break 93.66, and that will also create a W pattern which is going to complete somewhere around here, which we have already defined in terms of these levels. So we'll have to see, we'll have to wait and watch, but if you're a day trader, or if you're a short-term swing trader, or even if you're a scalper, then you have very good opportunities on DXY and obviously related currency pairs such as USD CAD. So hopefully you enjoyed this. If you did, hit the like button and drop a comment. Let me know what you think about this analysis. Let's move on to other indices. Okay, let's look at S&P 500. Now on S&P 500, I'm not going to use this chart because this is little outdated. I've been sharing a different chart with our group, so let's look at that. And let's go to S&P 500. So on S&P 500, we know that the market actually came to that level which we identified here, and since that market has been falling down, and this is what we were expecting. Now we already had these important levels drawn up, and these we drew like a few weeks in advance. You can check out the previous analysis if you want to know how we came to find these levels. But in our group, in our Telegram group, this is what we were looking at. We were actually trading short term because there is so much going on around here. I mentioned that around here that market would come back down, and this turned out to be a great trade. Then it went back up to the same level that we identified, and then it became support. It went to the next level. So all of these levels have been playing out very nicely so far, and we have been taking trades around this. Now on Friday again, the market tried to go below this, but it held that particular level. So these levels are very important that we actually found out around here. So we are going to just reset this, and we'll come up with the new one. For now, what we can see that market is holding this particular level here. So if I just draw something like this can act as like your support, so as to say. But we can also see that market is creating a W pattern, and there are multiple complex W patterns within this structure. So if it is creating a W structure, and if the market starts to move higher, then what we can expect it to do is come to somewhere around here. That's a possible zone. This is where it can come to. If I go to the 4-hour time frame, this is what we saw on the other chart, and this is where the market can come to. However, for it to do that, it needs to go through those levels which we identified here, right? So it needs to break through those levels to reach that particular zone. And on the bearish side of things, which we did not cover in this analysis, let's look at the bearish side of it. So if I go to the daily time frame, if the market breaks through this level, which is acting as a structure level here, then we can expect it to come down to somewhere around here. So if I draw fib on this leg, you can see that it has been struggling with near about 50%. It touched 50%, started to move up. So if the market starts to fall down, the first place it wants to go to is 61.8, and that's where our level is. That's where Porta cluster moving average is, and once that it has been broken, then obviously it will try to come to 78.6. but ultimately if it continues to fall, then it will come down to this particular level, which is right here. Which is right here. Okay, so but we'll have to see how the market behaves before it actually starts to fall to those levels. For now, what we can say that if this level is held, if 3329 is held, then we can see push to the upside, and if that is the case happening, then all of these levels are still valid, and they can still give us a lot of opportunities up and down, long and short opportunities. So this is what we have on S&P 500. Let's look at US 30 Dow Jones. On Dow Jones, let me just clear this and let's open another one here. So we expected market to fall down to these levels, and it did come to those levels right there. So these levels are still very important because the market hasn't actually broken any kind of structure, so we are still fine with that. All we have to do is just make sure that where the market is going to. So if we see that there is a W pattern happening here, that means we can measure that, and that means that market is, if the market picks up bullish momentum, then it can start to move back into this zone, and if that happens, then we can look for a long opportunity into this level, and then ultimately into that zone. And once that zone has been reached, then we can look for a short opportunity, and that will be a similar kind of case available on S&P 500 because they kind of mirror each other. So S&P 500, once again, similar kind of structure. So this is what we have. We can look for a long opportunity if the market starts to move upwards into this, and then ultimately it can go all the way. And this is what we covered in the different chart of S&P 500. And if it starts to fall down, then this is what we are looking at. So this is what we have on S&P 500. But if we go back to US 30, we still have these levels intact. So I will trade between these levels. If I see a good confirmation happening on the long side, I will take the trade, go into this level, and then I take my profit off, because at the moment this market is not going for a long, longer period profits or extended profit targets. You can play for short-term profit targets very nicely, and you can just take it and just leave the market and wait for the next opportunity. If you play like that, it's going to be very, very profitable for you. So if I get a good opportunity to go long, I will go up to 28372 and I'll wait for a confirmation. If that level breaks, then I'll go into this zone as a long. Then if that actually shows me a reversal, then I'll go for a short and come back into these levels. And so I will trade from level to level in this market. So that's what we have on US 30. Let's look at Nasdaq. Now Nasdaq came right into our zone, which we expected. It did not go upwards, which is fine. Market is not going to do everything exactly what we planned for, but ultimately it did come into this zone that we identified. Okay, on Nasdaq, let's see what we had on the other side. Now on Nasdaq, we found these levels, but market never actually came there, so we never got an opportunity to go for a short position. Okay, if we did not get a good short position and the market has now broken this previous structure, then we should be looking for a move upwards. So let's do one thing. Let's remove this and go to the weekly time frame, and what we see here is that market can come down to this level which we have, and there is a candle. Okay, so the next week, if you look at just this particular candle, this has closed inside, and this is kind of like a deceiving candle, because most of the traders will think that this is an inverted hammer, but in my opinion the next week can be bearish, so it can actually start to fall down into this level. That's quite a possibility. So let's look at the daily time frame. On daily time frame, what we can see that market is trying to create an M pattern here. So it basically has come to 61.8 and it has now come to 78.6. that means it is expected to go higher. Okay, so this is looking very, very interesting right now. So this is the level that we have. We have two levels here, and then we have the third level around here. And if I just remove this and remove this as well, what we can see that market is also creating a W structure. So if we draw Fibonacci on this, okay, this is looking very interesting indeed. If I draw that level and another one right here, so these levels are very, very important. Let's go to the 4-hour time frame. What is happening there? Okay, on the 4-hour, because it has actually broken the structure of the previous structure around here. So that means right now the market is expected to go higher to test out this thing. So if it continues to move higher, then we have a pattern which is going to be completed around here. So this is how we are going to read it. Let's put a line here. Okay, if the market continues from this level all the way high, then we are expecting it to go into this level, and it can also try to go into that level. And if that is broken, then we will try to reassess where it is going to go to. Okay, because we are also having a W pattern which can complete here. So this is a possibility. Okay, if the market starts to fall, then obviously on the bearish side we have these possibility available to us. So that's what we have on Nasdaq. Hope you enjoyed this, hope you found this useful. If you did, drop a comment, and do not forget to like and share this video. Let's move on to FTSE 100. on FTSE 100. Now we were able to take very good trades on FTSE 100 because remember, we were actually looking at it right here, and we came up with both bullish and bearish plans, and we ultimately took the bullish one, and we expected market to move into this zone ultimately, and we were able to take the profits right there. So both of our profit targets on the long side were taken, and this turned out to be very good trade. So if I just remove the drawings and go to the monthly time frame to reassess this, what we see that market tried very hard to actually sustain that bullish momentum. It actually fell down and tried very hard, and in the previous month, if you remember, I mentioned that this is kind of inverted hammer, so we were expecting bullish candle, and so far this is what we can see, and that is why we were also going for a long position. So if I go to the weekly time frame, on weekly time frame it looks like a consolidation, and to some of you it may also look like a channel sort of thing which is happening right now. So if that is the case, then you can play like up down movement both sides on this market. And what we can also see, that market is trying to create a W pattern here. So this is how it is going to look. We have something 50%, okay, and now it has come into, let's measure this. Okay, so this has come to 38.2, and that is why it has been moving upwards. Okay, fine. So that means this is still a very good level for us to watch out for, because if the market comes back down here, then we can look for another upward opportunity. And if we see the daily time frame, on daily time frame we had a very good W pattern, and that is why it has been falling. And let's see where it is expected to go to. First let's establish that W pattern. Okay, so we had two W patterns, and if that is the case, then it should come to 38.2, which it has. Okay, and that means this level is also very important, and the next level which is important is around here. So let's remove this. Okay, now so this is how I'm going to read this. At the moment this is looking very messy for me, but we can also see that market is creating an M pattern here. So if this level is broken, if 6,000 level is broken, because that's a round number, right? So it may take a little time to actually consolidate around here, but you can see that this candle has already violated this previous midpoint of the M pattern which is forming. So if this market starts to fall, we can expect it to go somewhere around here. So let's see. Okay, right now what we can see, that market has actually completed that W pattern. So pretty much like S&P 500, it can actually start to move higher. That's a possibility because an M pattern has been completed. So let's look at the bullish side of it. So that's where it can come to, and these are the levels which are more important. Okay, however, there is a complex M pattern is forming right here, and that means the market can come to right into that zone that we identified from high time frame. So that's looking very good. Okay, and this is another level that we have, right? So on the bullish side, if we start to move higher, then these are the levels, and if this level is broken, then we are looking at these levels on the bearish side. So this is what we have on UK 100, which is FTSE 100. Some of you have actually requested me to include Nifty as well, so let's look at Nifty 50. This is Indian index. This is actually not a very good data feed. Let me see if I can find a better one. Okay, Nifty Bank, Nifty Next. Yeah, okay. That's a Nifty Bank. Okay, Nifty Next. Okay, Yeah, this feed is not that good because it has a lot of gaps in there, but let's see what we can come up with. Okay, so what we can see that in Nifty actually came on monthly time frame, it came right into water cluster moving average and started to move higher, and since then so far what you can see that what most of the people classify that a V-shape recovery, but it's actually not a V-shape, it is actually a W pattern again. So if I go to the weekly time frame, this is what we can see. Market has created a W pattern here. It came to that, and that means it came to 38.2. that means it was expected to come to 78.6, which is around here, and market now has come there. Now there is another pattern, extended ones, which are available at these levels. So that's what we have, and if I draw Fibonacci on it, okay, these are the levels which are more important. So let me just quickly clean this up so that we can discuss what's happening. Okay, right, so on Nifty what we can see that if the market starts to move up, which I am not expecting right now because I can already see a lot of bearish momentum, right? This candle cannot be ignored. This is a huge candle. This is one of the largest candles that we had since this one, right? So we cannot ignore this. This is obviously showing very bearish sign. However, if the market somehow starts to move up, then we are looking at this level of 11,909, and if this is broken, then we are looking at obviously 10,820. So but we have moving averages, especially the water cluster one. So if this level is broken, then only we'll look for a short into 10,184. And if for some reason the market finds enough bullish momentum, then these are very important levels to watch out for. And if these levels are broken, then only it can go to 13,138, but that remains to be seen. At the moment it is not looking bullish, it is looking bearish. So we'll have to see, we'll have to watch for the price action. That W pattern is looking very, very good, and this can give us a very good opportunity to go for a short if we get a confirmation here on the break of 11,416. If that level is broken, then we have a very good opportunity to go for a short. But remember, all the indices follow the major index which is S&P 500 and US 30. So if S&P 500 is thinking of actually going upwards, then Nifty can also do the same. So you'll have to be careful on Nifty. Watch S&P 500 because most of the indices mimic that behavior. So this is what we had on indices. Hope you enjoyed this thorough analysis. Hope you found it educational. There is a lot of educational material in there. This is not like a quick analysis. So if you found this useful, educational, make sure that you drop a comment. Let me know what you think about this analysis. Like this video and share it with other traders and trading communities. And make sure that you have a very good trading week next week. All the best. Thank you. If you're interested in learning how to analyze the markets the way I do using Fibonacci Confluence, then head over to Vikinsa.com, and under training section you'll be able to see Core Strategy Training Program. On this page you'll be able to see the testimonials of previous students and also look at the brochure. The brochure has a lot more information including the course structure and the Fibonacci Confluence Training Program curriculum. This is a very extensive program in which we cover basic core Fibonacci concepts along with the advanced concepts to analyze the markets with high probability. If you're interested in joining this program, come to Vikinsa.com, and under training section you'll be able to see and submit this form.